Hello everyone, I am Mrs. M. Priya, Assistant Professor, Department of Commerce, St.Josephs College of Arts and Science for Women, Hosur. In this video, I am here to present Fund Flow Statement. The numerous transactions of financial the nature take place in a business firm over a period of time. It is necessary to consolidate and summarize the transactions to obtain a comprehensive idea about the nature, effect, consequence, and the result of the transactions. Financial management is concerned with the management of the funds resulting from business decisions and transactions. It strives to regulate the flow in a purposeful and profitable manner to obtain advantage to the firm. Thus, it is essential to record, analyze, and interpret the changes in financial position of the firm and control the future operations. The definitions of the fund flow statement. The total amount of funds used in a firm's operations is equal to the total assets employed in an enterprise. This view supports the broadest meaning of funds as total resources. The accounting of International Accounting Standards 7. The term fund generally refers to cash equivalents, or to working capital. This view leans towards the narrower meaning of funds. The concept of funds, the term funds is a highly disputed one conveying different meanings to different people. Its meaning spans from the total resources of a concern to cash and near cash items. However, the income statement has limited the scope and is restricted to the inflows and outflows of net assets resulting from the supply of goods or services. Similarly, the balance sheet is a static statement presenting the assets and liabilities on a particular day. The limitations of fund flow statement. It is historical nature. It shows that what happened in past. It is nothing but secondary data. The information in financial accounts is rearranged and presented. It is a summarized presentation of figures and cannot provide information about the changes on a continuous basis. The effect of transactions between the current assets and current liabilities is not shown in the statement. It also ignores transactions between long-term assets and liabilities. Provisions of funds. Non-current assets. This is the all assets that other than the current assets can be termed as non-current assets. They include the following for the fixed assets, intangible assets, long-term investments. That's all. Non-current liabilities, all those liabilities are not included under than the current liabilities. The share capital, debentures, reserves, these are the examples. Current assets. The current assets is like the assets that a company or individual expects to convert into cash or use it within 1 year or the normal operating cycle of the business. Current liabilities. It is the obligations or debts that a company or individual expects to settle within 1 year or the normal operating cycle of the business. The short-term financial obligations. The accounts payable, borrowings, outstanding expenses, income received in advance, tax payable, and dividend payable. These are the examples of the current liabilities. Applications of funds. It is refers to how financial resources are allocated or invested. It can include areas like business, the expansion, research and development, the debt repayment or other strategic uses of capital. Specifics depend on the context, such as personal finance, business or investments. The examples of the applications of funds is like redemption of shares and debentures, repayment of loans, payment of dividend and tax, purchase of fixed assets, purchase of long-term investments. External sources of funds. It is like external sources of funds refers to capital that a business or individual obtains from that outside entities like bank loan for the borrowing money from financial institutions. Investors, it's a bringing in external investors who contribute funds in exchange for the ownership or shares. Bonds, issuing to raise the capital with the promise to repay the principal amount with interest. grants, receiving financial support from government bodies, organizations. The venture capital, the funding from venture capital for startups and high growth potential companies. Crowdfunding, the collecting small amounts of the money from a large number of people, often through online platforms. The external sources of funds for the examples is the issues of long-term investments, long-term borrowings, sale of non-current assets, non-operating incomes. Thank you.